I ignored the $7 credit card alert. By morning, my portfolio was down $42,000, and I still didn't know which mistake would cost me more. I leaned over the glowing trading dashboard, late-night office lights reflecting off the glass. Coffee cold, half drunk. Emails piled up, but one subject line caught my eye: insurance claim pre-approval, pending. My stomach tightened. I knew the claim could stabilize our cash flow, but something about the wording felt off. I'm Oliver Whitmore. Portfolio manager. Risk strategist. I manage tens of millions in investments, and I've built my career on anticipating problems before they appear. Yet here I was, staring at a minor alert that somehow felt like the first domino. The screen blinked. Another notification. I didn't dare click it yet. The credit card pinged again. $12,500 spent. My fingers hovered, frozen. Who could access our corporate funds without authorization? I opened the insurance portal. Denied. Just like that. The claim I thought was secured was rejected. One overlooked clause, a fine print exception, had voided the policy. My mind raced through every financial scenario: ROI collapse, business cash flow stress, and regulatory scrutiny. A new email arrived. Subject: suspicious transaction detected. My chest tightened. The numbers were multiplying. I called Elliot, my head of IT. We need logs. Now. His voice was calm, but I could hear tension. The portfolio dashboard refused to stabilize. Red numbers flickered: 3.2% down, 6.1% down, 10% down. Every second I hesitated, the risk compounded. Meanwhile, investors were emailing, expecting 18% ROI this quarter. I could almost hear the judgment in their words. Do I admit the misstep? Or try to contain it silently? An alert blinked from our partner's portal: transaction flagged, external intervention suspected. My heart jumped. I paced the office, eyes darting between screens. Board meeting in 20 minutes. Cash flow crisis. Investment leverage exposed. Insurance coverage voided. Everything converged at once. Oliver, the audit report's incoming, Elliot said. I clenched my jaw. Regulatory compliance risk was no longer theoretical. The phone buzzed again. Another credit card alert. Someone was actively testing the system, or worse. Flashback hit like a cold wave. I remembered the first $7 alert months ago. Dismissed it. Then the $200 anomaly. Ignored it again. Each small oversight, each silent decision, led to this moment. An email from the board: immediate review required, transaction irregularities. My hands trembled. Past confidence collided with present panic. Elliot traced the unauthorized transactions. Internal fraud. Someone within had used my approval credentials. My portfolio wasn't just bleeding, it was being siphoned systematically. I could almost feel the echo of every ignored alert reverberating in my chest. $42,000 gone. $12,500 gone. And the insurance denial? That was my oversight too. The trading app blinked red, an incoming margin call. My fingers hovered over the emergency freeze button. Could I stop it in time? Boardroom silence. Investors watching via video link. My voice steady, but my stomach twisted. We've identified unauthorized transactions. Systems are frozen. Elliot whispered, some cleared already. My pulse spiked. Every microsecond counted. Portfolio collapse imminent. ROI expectations impossible to meet. Regulatory exposure real. The phone pinged. Another email from a competitor. Or worse, internal. Subject, your approval signature used, urgent action required. My breath caught. I stared at the portfolio dashboard, the red alerts flashing like a warning I could no longer ignore. $96,000 of potential exposure glared back at me, each number a reminder of my delayed reactions. My hand hovered over the mouse, shaking slightly. One wrong move now, and everything could unravel. I took a deep breath, feeling the hum of the office and the rain tapping against the glass. Every second stretched, my heartbeat echoing in my ears. The first step was containment. I froze all pending transactions flagged by the credit card system. Even minor $7 and $14 charges had already drained thousands. How could I have underestimated such small alerts? Amelia, my CFO, called immediately. Oliver, the freeze is in place, but the insurance denial leaves us vulnerable. Any further misstep could trigger liquidity issues. Her calm tone barely masked the tension in the office. My stomach twisted, the safety net I'd relied on had holes I couldn't ignore. I dove into internal logs, tracing approvals. One name kept recurring, Oliver Cole, someone with access I trusted. My chest tightened. Internal fraud. Not external, but deliberate misuse. I dialed him, no answer. Every moment of silence amplified the stakes. I left a precise message, call me immediately. This is urgent. While waiting, I reviewed the insurance clause I'd overlooked. Clause 14.3, internal fraud or employee misuse is excluded. My stomach sank. One oversight, one misread alert, and the board might see negligence, not misfortune. I emailed legal counsel, detailing transactions, anomalies, and potential exposure. Then the dashboard pinged again, another $75,000 transaction pending approval. My fingers hovered. Every second, risk multiplied. One click could stop the loss, or trigger an irreversible chain reaction. I whispered to myself, if I click approve now, could it ruin everything? My eyes darted to the live portfolio graph. Numbers falling and rising unpredictably. My adrenaline surged. Survival was no longer enough. I needed control. But every action carried consequences, legal exposure, investor distrust, and reputational risk. The office door clicked. Oliver entered, calm, almost mocking. I see you found the alerts, he said. My heart raced. Was this apology? Threat? Or strategy? I glanced at Amelia's message, do not approve until we verify. Risk exposure critical. My pulse quickened. One wrong move could cascade losses further, or freeze operations at the worst possible time. What would you do if every second could cost millions? Would you freeze the transaction, or take the risk to regain control? Oliver stepped fully into the office. Rain streaked the glass behind him, city lights refracted across the polished floor. I didn't lower my hand from the mouse, every muscle tensed. One click now could stabilize or destroy the company. He spoke softly. The next move isn't just money, it's control. Who controls the narrative if this leaks? My jaw tightened. He was right. Control was the true currency, and I had nearly lost it. I scanned the portfolio again. Red creeping steadily. $14 here, $75,000 pending. Every number a live threat. My stomach twisted. Could I salvage the company, the trust of the investors, and my own credibility in this one moment? Amelia pinged, verify before approving. Legal exposure is critical. I exhaled, mind racing. Freeze it, approve it, escalate to the board, every option carried massive risk. Seconds stretched into eternity. Oliver's calm gaze didn't help. What's your move? He asked. All eyes on me, yet every choice felt like gambling with fire. My reflection in the darkened screen showed a man forced to act, yet weighing each consequence like a chess move against a ruthless opponent. The live transaction alert blinked. My hand hovered. My heartbeat thundered. The credit card notifications had become a siren, small alerts leading to massive exposure. Every past oversight now converged in this single decision. I whispered, one click, and everything changes. But the question lingered, gnawing at my mind. Would freezing the transaction stop further losses or trigger a cascade of distrust and operational paralysis? Could approving it restore control, or make the situation catastrophic? I took a deep breath, eyes locked on the blinking alert, fingers poised to act. And then I realized, this choice wouldn't just affect numbers on a screen. It would define my control, my career, and the fate of every investor watching. If you were in my shoes, what would you do next? Freeze it? Approve it? Or trust someone else to act first?